If you want to learn more about the formulas and theories I use when I analyze companies, go check my website whatinvest.com. There's a link in the description of this video, and in the section blog you will see a lot of articles in which I describe the formulas that I find most useful. So go check it out. Hey guys, what's up? How are you? I hope you're doing fine today. And for today's video we're gonna discuss Disney. So let's go. I'm going to go straight to the point, okay? Disney is a must-have stock, okay? Why? Because whenever you're trying to analyze a company, you have to think about the future of it, where Disney will get revenues from. We have, first we have to know that Disney consists of 4 segments. We have media networks, that's basically TV, parks, experiences and products, parks, all the parks of Disney, and products, for example, merchandising of Toy Story or Frozen, those kind of merchandise you can think about. We have studio entertainment, movies, that's it, and direct to consumer and international channels, Disney Channel from your country if you're from Spain, Italy, whatever, and direct to consumer Disney Plus, Hulu, and ESPN Plus. That's it, okay? That's the company. Don't think further about it. There's nothing more important about it, okay? Now, I could talk about the revenues, but as I said, I'm not gonna discuss that. You can check that on the website in any annual report of Disney, and you can see that revenues have been growing. That's it. I'm not going to show you a table or anything similar. Also, I'd like to let you know that, in case you don't know it, Bob Iger, the legendary CEO of Disney, resigned a couple of weeks ago, and now we have a new CEO, Bob Chapek, and he was the head of operations of parks and resorts. Now, the interesting part, why you're watching this video? I guess it's not for me, because look at me, it's not for me. We have 2 sources of revenues that I believe they're going to be the future of the company. First, direct-to-consumer platforms, and second, Fox assets. Now, Disney acquired almost all assets from Fox except television for $71.3 billion. That transaction consisted of half cash and half stock. Okay. With this transaction, Disney acquired 21st Century Fox film production businesses, FX Networks, National Geographic Partners, Fox Networks Group International, Star India, and the most interesting asset, at least this is what I believe, is the interest in Hulu. Prior to this transaction, Disney owned only 30% of Hulu. Hulu is a SVOD, streaming video on demand. So basically you can watch movies. Also, you can subscribe to another plan that you can get TV as well. Now with this acquisition, Disney owned 60%, but Hulu owned the stake from, I think it was AT&T, and that was 10%. So now Disney owns 67% of the company, and the remaining 33% corresponds to Comcast. And last year they announced that Disney will acquire the remaining stake at Hulu in 2024. So Disney will own the entire Hulu. That's amazing, actually. It's very good news, at least in my point of view. Now on your screen you can see some data I recollected from the Disney website. And just give me a second and I will tell you about it. Yeah, perfect. So as of 28 December 2019, we can see that Hulu has 2 main plans. The first one consists of $5.95 a month, and it offers just the basic plan, movies. That's it. And they had 27.2 million subscribers, and that means a monthly revenue of $163 million a month. And then we have Hulu plus Live TV, that's $55 a month, 3.2 million subscribers, and monthly revenues of $176 million. So that's a total of $339 million approximately a month. That means yearly it's around $4 billion. And also we have Disney Plus and ESPN Plus. In this case we have Disney Plus for $7 a month, that lets you watch any movies from Disney, including Pixar movies, Marvel movies, Star Wars, and I think some content from National Geographic. And content from Fox as well. I have no idea what content because I'm in Ireland and Disney Plus is not available here, but it will be available on 24th of March, in about 1 week, next week. That's great. I'm really looking forward for it because I'm a very big fan of Disney content, especially Pixar. Actually, I can say that more, like 3 of my 10 favorite movies of all time are from Pixar. And so I'm a very, very big fan of Disney. That's probably one reason I like the company so much.
Yeah, don't tell us your life.
Anyway, and we have $7 a month for Disney Plus, 26.5 million subscribers, and revenues of $195 million a month approximately. Then ESPN, $5 a month, 6.6 million subscribers, and $32.9 million in monthly revenue. That's a total of $218 million approximately. Of course, I'm not counting with bundles, because there's a bundle I think in the US for $12 or $13 that you can get a basic plan of Hulu, Disney Plus, and ESPN Plus. And I'm not assuming those costs because it's no point. I mean, it's a waste of time right now, because these are not exact numbers. Actually, I forgot to say $218 million a month approximately. That's a $2.6 million a year. So if we add the revenues coming from Hulu and from Disney Plus and ESPN Plus, we have $6.6 billion annually. Okay, with these two assets. And what's most impressive about this is that 90% of these revenues comes from the US, because Disney Plus is only available in the US, Australia, New Zealand, and the Netherlands, I think. Hulu is only available in the US, and ESPN Plus is only available in the US as well. So there is a lot of room for improvements. Let's imagine that Hulu expands all over the world. How many subscribers can they have? How many subscribers will Disney Plus get when they expand to Europe this 24th of March and the rest of the world during the year? These revenues could easily double. Easily, I can say. Okay, so we have that's why I started this video saying that it's very important to know where future earnings will come from. You have to know about it. And also, well, regarding Fox, the other assets apart from Hulu, that enables Disney to to produce more movies, more content, because there are more, let's say in simple words, more characters to make movies. And also that expands the possibilities of parks as well, because now they are able to, I think they already done that, but now they can, for example, make specific theme parks about Avatar, for example, or The Simpsons. I'm not sure, I have to check about it, but I think that's how it works. Anyway, what I'm trying to say is that future for the company looks brilliant. There are two main sources of revenues that I think couldn't be stronger, because let's be serious, who's gonna compete against Disney in the streaming video on demand? Nobody has a bigger library of content than Disney, probably just Netflix. But for example, library from Disney is bigger than the library from Apple TV Plus or Amazon Prime Video. So I think Disney has an edge on that. So now let's talk about the price, because you can't buy a share, even though you love it, you have to look at the price, because it's very important to not overpay for the stock. And right now I'm looking at the stock, and as today, 18th of March 2020, we're living kind of a difficult situation with this coronavirus, and the stock market has plummeted, basically. Has decreased around 30% since the beginning of this crisis. And for example, right now the stock is selling at less than $88 a share. And I think that's a very wonderful price, because that means the company is selling, let me check, is selling at approximately, let me do the math, earnings per share in TTM were 5.94. So if we divide 88, where's my phone? I want to calculate this. Okay, perfect. I have my calculator in here. And we have 88 divided by 5.94. So the stock is selling at 14.8 times earnings. And I think that's a good price. It's not a bargain because the average PR has been 18. So it's not that great the price, but it's fine. It's fair, I think. Actually, it's better than fair. And of course, the stock has declined like 35% since the beginning of this coronavirus. But the problem was that, in my opinion, the stock was a little bit overvalued before everything happened. It was selling at $142 a share. And because there was a lot of excitement regarding Disney Plus and all these streaming platforms. But now the stock is selling at a more, let's say, accurate price. So I think that's the moment to buy shares, because again, this coronavirus will affect Disney's revenues, because actually Disney had to close almost all its theme parks, and most of the cinemas are closed as well, so there are no revenues coming from the studio entertainment unless they distribute these movies in other streaming videos or in another TV channels or other services such as Sky or Google Play Movies. But yes, I know that revenues will be affected, but just in the short term, just for this year or probably maximum next year. But in 2 years, Disney revenues will get back to normal. And now at this price, it's a very, very, very good price to buy. price. It's a very good time to buy the share, because it's everybody wants to own Disney shares. So I'm pretty sure that the stock will rise in price in the future, and it will be probably depending on the success of Disney Plus in Europe, it could get overpriced very fast. So if you can buy shares now, I would do it, because it's my opinion. But as I always say, do your own research, use the information I gave you, and of course I highly recommend you to look at the annual report and read it, because it's very interesting. In there it explains all the business segments from Disney, and it will help you make a more accurate decision. So that's it. If you have any questions, just leave them down in the comments, and I will look forward to reading them, and I'll see you in the next video. Thank you so much for watching.